Welcome back to the show, everybody. Check out these headlines. London's ready. Greg Kidd buys a bank. And we got Jeremy Hogan from Legal Briefs highlight on 4 predictions of the SEC versus Ripple. Somebody roll that beautiful intro.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow us on TikTok, YouTube, and Twitter for exclusive content. $891 billion market cap for crypto. We're off by 0.6% right now. Bitcoin, $17,100 plus. Ethereum, $1,200 and change. And we see XRP at 38 cents, but that Tether market cap's at $65.7 billion. We're watching it. We're to see what the government thinks about that USD Tether at some point. Ladies and gentlemen, you got to be accredited to get these products, but your chance to get Ripple, Polysign, Rippling, Alchemy, and Link2, if it's, Link2's on there. Uphold, which is fully subscribed right now, but Unstoppable Domains even, and so many other incredible products if you're accredited. Let me tell you, click the link below because right now there are $5,000 minimums. They're usually $10,000 minimums, and I don't know how long that's for, but when they shut that door, it's over. So make sure you take advantage of that. Click that link and you tell them I said, come on in. Jake Travinsky says Sam Bankman-Fried has officially been added as a witness for next week's House Financial Services Committee hearing. John Ray will testify first, then Sam, each on their own. Well, this is going to be exciting, but I have a feeling this is going to be a lot of I do not recall, I can't remember, and no comment. You know, there's going to be a lot of that. Now, yesterday, if you have not seen the video on BRICS, and you know we've covered BRICS Coalition here heavily, I encourage you to go watch that video about the funeral procession for the petrodollar. This is, in fact, a clip here of President Xi in Saudi Arabia. And we know that Saudi Arabia is the home of where the petrodollar agreement exists, right, with the United States. That all oil will be bought and sold in U.S. dollars. Well, now Saudi Arabia is hosting President Xi from the BRICS coalition, and we know Saudi Arabia has an MOU, a memorandum of understanding, to the tune of, I believe, $15 billion with BRICS coalition. So there's absolutely some real movement and intention for Saudi Arabia to get involved with BRICS coalition, and that could certainly have huge implications on the U.S. dollar. We'll keep an eye on it. This here is Christine Lagarde from the European Central Bank. I want you to listen very closely to this video of what Christine Lagarde is talking about. And it does sound like to me that something is coming in the way of a paradigm shift on how we move money and value. Take a listen to this. And shout out to Riz for this when he says that London's ready. Take a listen.
Crypto ecosystem, the money market funds experienced acute liquidity strains. You all remember that. This reflected a structural liquidity mismatch at the heart of their operations, with them offering on-demand liquidity to investors while at the same time investing in more illiquid assets. And that is because we must contend with potentially new sources of financial stability risk. For example, one area in which the financial system is adapting to new technologies is in the so-called crypto assets and decentralized finance, DeFi. Crypto assets are exceptionally volatile and pose considerable risks to consumers. Recall, after peaking in November 21, that was just a year ago, the price of Bitcoin fell by almost 75% in 1 year. And only last month, we saw the chaotic, complete collapse of FTX, a crypto asset exchange once valued at $32 billion, and a critical player in that field. While the impact of such episodes has been contained so far. Systemic risk could easily arise from increasing interlinkages between the crypto ecosystem and the traditional financial system.
There it is, ladies and gentlemen. Systemic risk. By continuing to bring together the traditional system with the new one. And this lies in this statement, whether we're talking about the US or the ECB or London or anywhere else, where I believe the power of the government is very close around the world to adopting value protocols. Well, I happen to personally believe XRP Ledger is going to be a part of that conversation, but I could be wrong. It's not financial advice, it's my digital perspectives, but I believe there will be a handful of protocols that will get the anointment of regulation by governments around the world that will be seen as the protocols we use on the internet, but instead to move value. I think what she's talking about right there is bringing us very closer than we've ever been to that conversation becoming real. And you can't have that conversation without having this one. Max Kaiser is on Stansberry Research with Daniela Cambone. If you haven't seen the interview I just did with Stansberry Research and Matt McCall, please go watch that. We had a remarkable conversation about Tether also, but it went a little different than this one. Take a listen.
Now, surrounding Tether loans, could the next fiasco be Tether?
No.
No?
No.
That's it.
Well, it's
just no.
It's the first. It's a bit of the stablecoin market is outside really of Bitcoin and the. Can I say shitcoin on the show? I don't want to offend anybody.
Yes, go ahead. No.
Okay, well, let's talk about that. Stable coins are different than other assets like Bitcoin and the rest of the market, as in they are not a speculative trade asset. They are pegged one-to-one to regular fiat dollars. But let's talk about what Max is missing. Let me just give a little bit of this right here. Take a listen.
Just no.
It's the first. It's a bit of the stablecoin market is outside really of Bitcoin and
other coins. No, it isn't. Where do you think the money came from to buy the Bitcoin, Max? And see, here's the problem in the uncomfortable conversation. How much Tether's being minted to puff up and prop up the price of something like Bitcoin? The real scary answer is that no one can definitively answer that question. That's why Tether is a big problem, not just about the reserves. What happens with the purchase of this Tether? And is it being used to pump and control the price of something like Bitcoin, which has dominance over the market? Until we see use case utility, I think we take a step closer to that conversation and some real structure here. I'm going to give you just a few moments of this exchange from Greg Kidd on the Global Investor Conference. I had a chance to be on that panel as well with Linda P. Jones. If you haven't seen it, that was a remarkable conversation too. I'm going to bring you in right here with Greg Kidd, formerly of Ripple, former Federal Reserve official, says here, or certainly employee executive there, says that he is doing the most boring thing in the world, which is buying a bank.
Made a decision back then that, like, even though DeFi is going great, why don't we go in the other direction and do the most boring thing in the world, which is buy a bank in the United States, no less, sitting in a cornfield. And the question is, well, what the bank has to offer is something really boring, US dollars. Just like USDC is a US dollar stablecoin, but it's issued by a money transmitter, Circle and Coinbase. And so it's not FDIC insured. It doesn't have the capital efficiency of a bank. It's certainly not compliant because, maybe the first person who touched it's compliant, but there's nothing stopping that from ending up in an anonymous wallet.
And that's what we're talking about here. And Greg is trying to position himself here to where he has a bank and he can make a market, and it can be FDIC insured for an actual stable coin that could be issued off of that bank. And that is really creating a new sort of kind of Federal Reserve, really, but for stable coin. This is getting quite interesting, ladies and gentlemen. I mean, we're seeing a lot of people go at this thing and say, hey, don't pick them, pick me. One thing I'm sure of is something's going to get picked. Speaking of picking, we got to talk about this. Jeremy Hogan has his predictions for the SEC versus Ripple. John Deaton says this, and I echo it. He says, outstanding video and analysis as always. He said, I know for a fact that speak on behalf of at least 76,000 XRP holders, and I'm one of them, when I say thank you, Jeremy, and thank you to TenView, and absolutely thank you to both of them for all they do. And certainly John Deaton and his continued efforts for all of us. But we would be completely lost, and I certainly know I would be if it wasn't for these two and what they do, and I am very grateful for it. And now with that, let's go ahead and take a look at this, because this is the video, and I want to set us up. And first of all, I have to encourage you to go watch this entire video, because it is, as always, remarkable. But I want to start here as he breaks down 4 highlights. And again, I'm going to give you the very quick, short highlights of this, but you got to go watch the whole video to really get where each decision he's saying it would be coming from. And you're going to want all of that information. But for the sake of just giving you a quick overview here so you could go check it out, here we go right here. This is in the case of Ripple winning in a possible appeal.
I think. Here we go. I believe there are 4 possible outcomes to the Ripple litigation, and because I know you like preciseness, I have given each possibility an exact percentage chance of happening, and I will start with what I think is the most likely outcome, with exactly a 50.1% chance of occurring, and that outcome is, drumroll please, I think there is precisely a 49.56% chance that Ripple wins at summary judgment. A win for Ripple at summary judgment, because XRP was not sold as a security. Complete Ripple victory, and I think there are 2 bases for this, and possibly a 3rd basis as well. The first basis for why I think Ripple will win, and the most likely, is that I think Ripple will win because it had no legal obligation to purchasers of XRP after the sale occurred. No post-sale obligations. In other words, there can be no investment contract without an investment contract. Now, I want you to know that I've spoken with other lawyers who believe that Ripple may win on this issue on an appeal, but not at the trial court level, because it's such a drastic ruling that it kind of smells like it's more appropriate for an appellate court to find this and not a lowly level trial judge. But like I've said, I've read other opinions from Judge Torres, and I think she is exactly the type of judge that would make a brave ruling such as this one. And I think Ripple will win on this issue because it is right. I don't think Ripple will win here because the SEC didn't respond well or did something wrong. I think Ripple wins on this because it is correct.
That is important to note, and shout out to Jeremy again. Now, I want to take you to right here, and oh my God, I'm skipping over such incredible information he gives here, and you better go watch the rest of this video, but I want to bring you to, I believe it is right here. Let's take a look at this.
Potential investors to reasonably expect profits from its efforts. That is an objective question answered by economic reality and Ripple's representations, not by individual motivations, close quote. But wait, before you pick up the phone for the Suicide Prevention Service, let me explain one more thing here. When I say there is a 30.1% chance of Ripple losing, that includes a loss that is not really a loss. And what do I mean by that? So, Brad Garlinghouse recently said that Ripple, I think, has $1 billion in the bank, $1 billion with a B, and a ton of XRP in escrow, of course. In other words, it can lose, be ordered to pay a crypto record disgorgement and fine, and it could stroke a very large check and probably continue on its business. So then the question becomes, well, exactly how much would a likely loss cost Ripple? Would it put them out of business? Well, it depends. Here's a chart from the SEC's initial complaint, which shows how much Ripple is alleged to have sold illegally. There, as you can see, from 2013 through the third quarter of 2020, the SEC alleges that Ripple sold $1,388 million worth of XRP. So those are the possible damages, plus a fine, of course. So by these numbers, what I'm suggesting is that even if Ripple were to lose 100%, it might be able to weather that storm financially and survive. And if, for example, the judge decides that only sales of XRP up through 2018, when the on-demand liquidity use case came into being, if only those were illegal sales, then the disgorgement amount becomes almost half of that, and surely Ripple could weather that loss intact. So
there you have that. Now let me move forward very quickly to another segment here so we can get to the third. And now don't let these things scare you, because it's all a part of the process legally. And we've talked multiple times about a possible appeal and then going all the way to the Supreme Court. This is getting very interesting. Now, listen, you know, I really lean heavily into the idea that XRP is some kind of a note. Now, personally myself, you know, this and 50 cents won't get you a cup of coffee, but personally myself, you know, I happen to think that XRP is a virtual currency the way the FinCEN decision was, right? That's me, you know, but what do I know, right? But I also think there's a chance because of that decision that XRP could get some kind of a non-security note designation, making it full on money. And that's something that I'm still waiting for, and we'll have to see. But as it goes through this case, the when something is a note is an extremely, extremely low percentage chance of that happening in this actual ruling. But if we go to appellate court and maybe on to a Supreme Court, because appellate court, we can get precedent, that conversation could probably open up a little bit. But we'll see. We'll see. I don't want to try to be right about it, but at this point, it looks like that part of that when something is a note is not going to play at this level of a decision. So with that, let's hear this about the fair notice defense.
What Ripple has done with the fair notice defense is that it has gambled with it and argues in its initial brief that it is not proper for the judge to rule on the fair notice defense, but that a jury should decide it at trial. And then it stopped arguing about it. I don't think its last two briefs it even talked about it, which is dangerous because the SEC has continued talking about it. And then in this last brief, it argues that the judge, not a jury, should decide the fair notice issue, meaning it should be ended here. And why does the SEC think the fair notice defense shouldn't go to trial? I read the footnote at the bottom of page 31, and I was surprised how candid the SEC was. Quote, "There are practical reasons why such defenses are not and should not be heard by juries. Allowing the defense would greatly lengthen government enforcement trials by permitting defendants to proffer evidence about the SEC's internal deliberations and the beliefs of countless market participants. This would require rebuttal from the SEC, further lengthening the trial," close quote. In other words, Judge, the fair notice defense shouldn't be tried to a jury because Ripple would be able to offer evidence about what we, the SEC, actually did or didn't do, and we'd have to defend ourselves. You can't let that happen. That made me both laugh and cry at the same time.
He's great. I can't get enough of it. And I mean, I'm telling you, if you go watch this video, you'll love the opener and the closer. It's remarkable. Okay, so now let's take a look at this where he deals with the, you know, what we cover here when something's a note, and then there's a 5 to 7% chance that the judge would do sua sponte, which is what it would really take, meaning that the judge would come in and say, you know, I'm not going to use your argument or your argument, Ripple, or the SEC's argument. I'm just going to make a ruling based on what I see here that neither one really properly addressed, and that's going to be my ruling. Now, this is what he says. Take a listen to this.
But if the judge agrees with Ripple that the defense should go to a jury trial, which I think there's a strong argument for, the general judicial mindset could be, well, if we're going to have a jury trial anyways, well, we might as well have all the issues in front of them. It's economic, and also it takes away the pressure from me, the judge, from having to rule on this strange technology crypto issue, which I don't really understand and I don't really want to have to understand. So therefore, I'm going to find a factual dispute which I can use to then send the whole case to a jury and take the pressure off of me, a lowly trial judge.
So that is a possibility, right? So that was actually a clip I brought you in a little too soon, but nevertheless, that's a big deal. He could, the judge could decide that, there's a factual dispute issue that, in order to submit summary judgment, both parties have to agree that the facts are not in dispute. So if the judge were to find some fact that wasn't really discovered by both parties and say, you know what, this is enough of an issue that we need to go to trial now because that new fact that's found is not agreed upon by one of the two sides, right? So I think that's an important thing to hold on to as well. Look, what is normal in this case? Almost nothing.
It is, as they say. Which brings me to my fourth and final possibility for the outcome of this case, and that is that the judge does something crazy that I haven't even thought of, like, I don't know, she grants Ripple's fair notice defense or does something sua sponte on her own accord, which no one could have thought of. Now that possibility has exactly a 5.3% chance of happening, maybe 7%. I can't discuss it because I don't know what it might be, but the fourth possibility would be something no one has really contemplated, and that does happen in litigation sometimes.
There you go, ladies and gentlemen. That's where we are on this day. And listen, I'm doing a live stream tomorrow, Sunday at 1 p.m. inside our Digital Perspectives Mastermind group. Don't mess around. Click the link underneath the video. You're going to want to be inside of that group. It is remarkable. We are preparing for the moment that is to come after all of this downturn crypto winter and everything that's happening with FTX and waiting for the USD Tether to see what goes on there. I believe that this is a time where real wealth is created. If you're a farmer, this is planting season. This is when you put the seeds into the ground. But in order to do that, we need to try to empower ourselves, make sure we got the right community and the tools with us to be able to make the best decisions for us and our family moving forward. And you can do that in the Digital Perspectives Mastermind group. That's going to do it for me, not financial advice from me or anyone else. I want to give a big shout out to Jeremy Hogan and TinView for all they've done through this case and everything with it. And I want to give a call to action to John Deaton and Jeremy Hogan and Legal Briefs. And I hope that they look into the Reggie Middleton Veritasium case and see if that could be quite possibly another huge case that we all need to follow very closely about the implications of the patents that Reggie Middleton holds and how he feels that a lot of token projects, as well as even businesses, are in conflict of. That's going to do it for me. I'll catch all of you on the next one.